What if I told you you could make a living off of your stock investments exclusively and you'd never have to worry about working ever again? In a video I did yesterday on realty income, I mentioned dividends a lot. Dividends have been around for a very long time, and famous investors like Warren Buffett totally love them. But it seems like recently, especially among young investors, the number of dividend-focused investors has been increasing. And I've also been getting people asking me like, what are dividends? Why are they so important? What do I look for in a dividend company and things like that? So in this video, I just wanted to break down a little bit about what dividends are, what they mean, how they can be helpful for you, and how they can be really beneficial for your future. So as a stockholder of a company, you are one of the owners of a company. And as the owner of a company, you're entitled to make money when the company makes money. So many companies, not all companies, but many companies offer a dividend. So let's say they made 10 bucks. They're like, okay, shareholders, you can share this $1 kind of thing. That's a really simplified example. But basically, companies that do pay a dividend can choose how often they pay it out. Some companies, like Realty Income, choose to pay it out every month, so much so they've been doing it for so long that they call themselves the monthly dividend company. Other companies will pay out once a quarter. There are even other companies that pay out less frequently than that as well. Before we discuss dividends and the magic they provide, I wanted to talk a little bit about retirement planning, passive income, and use kind of a more tangible example of how you might apply dividends to your own investing strategy. Let's say, for example, your monthly expenses are something like the following: rent $500, insurance $300, food $400, entertainment $200, travel $300, and other stuff $300. That works out to a total of about $2,000 a month. Technically, if those were your bills, you could live off $24,000 a year. You wouldn't need any more than that because you already have all of your bills covered. And if that $24,000 a year was coming in automatically regardless of what you did, you would be free. You could do whatever you want. You could spend all day making YouTube videos. You could spend all day playing video games, becoming a professional gamer, or planting a garden, or taking care of your kids, or whatever. That's the idea of passive income. Passive just means you don't have to do anything and the money just comes in. So let's take that example of Realty Income that I mentioned earlier. They pay you out monthly, but we need to look at the dividend payout on an annual basis just for simplicity of calculation. The current stock price as of filming is 64 bucks, and they pay out an annual dividend of $2.80. So if we take $2.80 and divide by 64 bucks, their stock price, we get a dividend payout ratio of 4.3%. The dividend payout ratio is really important when evaluating companies, especially if you're a dividend-focused investor, because you can kind of evaluate if it's like a risky dividend or if it's going to be a reliable dividend. There are kind of two reasons that companies will tweak their dividends, but there are also a lot of companies that just basically have committed to paying a dividend long term and even growing that dividend little by little long term. And those are called the dividend aristocrats. But those two reasons for companies to be changing their dividends are because economic conditions have changed and they're kind of like, wow, we didn't make nearly as much as we thought we would this quarter, so we need to scale back our dividends and not pay people so much because we need that cash to invest it in other stuff. On the flip side, if they're growing really well, they might raise that dividend as well. So imagine you're a YouTuber and you're trying to grow your channel. You're only making $100 a month, but you're spending $200 a month in advertising. You could look at that and be like, dude, your company is running in the red. You're doing it the wrong way. And that's how a lot of companies will use dividends as well. They'll be like, hey guys, our dividend is super fat, so come invest in us. But it doesn't make sense if the company's only making $100, but they're paying out $200. You know that's not going to be long-term sustainable unless, in the YouTuber example, those advertisements are going to end up growing my channel at a faster rate in the future. Then it kind of makes sense. But I wouldn't be able to sustain that if I just kept making $100 a month and paying out $200 a month. If I continued doing that over years, I'd be like broke after a little while. And so companies will sometimes use a dividend to reel in new investors. But if their dividend payout ratio is too crazy, I would say if it's over like 30 or 40%, long term, you need to be really cautious about that. Sometimes you'll hear the term dividend safety, and there are websites on the internet that can tell you how safe a dividend is, and that's what it's taking into account. So if the dividend's getting too hot, too big for the actual company's income or profit, then it's going to become more risky, and therefore it might just disappear after a little while. And if you imagine you have a portfolio of like 20 or 30 or 50 or hundreds of stocks paying you dividends, tracking how safe those all are, like every month or every quarter, it can end up being a bit of work. So going back to our example earlier of you need 24,000 bucks a year to survive. We could invest a bunch of money, a huge chunk of money in O Realty Income, and if we had enough money invested in them at their 4.3% dividend yield, then we could pay our $24,000 a year expenses straight up automatically. So we know they're going to pay 4.3%, and we know our goal is $24,000 a year. So using some simple middle school level math helps us figure out what X is. Basically, we divide 24,000 divided by 0.0043, and we find that X is a little over
550,000 bucks.
So if you had
$500,000,
threw it in O, then you would be able to live for free doing whatever you want forever. Now, obviously your first thought is going to be, dude, where am I going to get
$500,000?
And that's where your life comes in. Some people, including myself, talk about starting a business. Like I took $100 and I turned it into $1 million, and I'll be making a series on how we did that going into the future. But another way to do it is if you just have a job that's long-term that you kind of like to do, you can just be chipping, putting a little bit of money into your investing account, into your brokerage account each month, and over 20, 30, 40 years, getting up to these kinds of numbers isn't that crazy. It all depends on your investing style as well as your personal kind of philosophy on how you want to do life. So that kind of explains why people are so excited about dividends, because they want to get to that point in the future where they just own a bunch of different companies and they're all just paying them monthly or quarterly, and then after a little while they can just chill and do nothing. So going to a more kind of realistic example of how you might start this process, let's say for example you started out with 5,000 bucks and you invested it in O right now. This year's annual income would be
$217.50.
You can auto reinvest that next year, so that rather than getting dividends on 5,000 bucks, this time you'll be getting dividends on
$5,200,
which is
$227.
So the dividend will be growing little by little automatically, even if you never touch that 5,000 bucks again. The list I mentioned earlier on the dividend aristocrats, which is basically a huge list of really reliable companies that have paid a dividend over 25 years without missing, but they also are growing that dividend percentage regularly as well. So imagine using O Realty. Right now it's 4.3%. Hopefully there are two other things coming into the growth factor into the future as well. It's not just 4.3% forever. Eventually it'll become 4.4%, 4.5%, maybe even 5%, 6%, 7% going into the future. But you also have the stock price appreciating as well. So if you had that $5.5 million and it's paying you 24 grand a year, that $5.5 million would also become 5.6, 5.7, 6 million, 7 million going into the years, hopefully. And that 4.3% payout ratio going up as well. As it's not just going to pay you 24 grand a year. Eventually it might be 25 grand a year, 26 grand a year, 27 grand a year. So that kind of multiplicative growth is what people are really going for with dividends. Little side note on REITs, like Realty Income, is that typically they aren't aiming to grow their actual stock price. Their main reason for existence, their main goal is to be throwing off that dividend income every month to the owners of the company, stockholders. So you may have heard of the term inflation. Inflation generally means that currencies get weaker over the years and therefore prices of things go up. So when my dad was young, he could go to McDonald's and buy a hamburger for like, 20 cents or 50 cents or something like that. Whereas now it's kind of like $4 or $5. Whereas when I'm, 60, it's probably going to be 10 or 20 bucks for a burger. So that's kind of the idea of inflation. And we can kind of generally trend, inflation is going to be X% per year forever. So a 100 yen coin or a $1 bill isn't going to be able to buy you the same amount in 5 years or 10 years. So as long as your dividend payout ratio and your stock price are growing at a fast enough rate to cover inflation, you'll basically be able to keep surviving, whether it's $24,000, $25,000, or $30,000 or whatever over the coming year. So how does this play out in your portfolio? I know a lot of people are just like dividend stocks only. One of the tricky things you got to take into account though is that because dividend stocks are becoming kind of hot recently, you'll be paying a premium for them. And so the return on investment, so to speak, isn't as great in a lot of cases, especially for the really big dividend aristocrat companies who've been around forever. As I mentioned in my recent news videos, it's important for us to be aware that stock prices probably might be trending down in the coming weeks and months because they've been so overheated recently. That being said, personally, my style is, as a businessman, is to be investing and looking for that big multiplicative growth, that big parabolic growth. You know, I'm a big believer in companies that are out to try and change the world, Tesla and Square, and a little bit less so things like Nvidia or Lemonade or D-Dog, these kinds of companies. And I think we can expect, as we have seen with Tesla, I'm like 1,000% gains or something like that on Tesla. But if you're looking at these companies that are big dividend aristocrats who've been offering this dividend steadily forever, people already know about them and people are already investing in them super long term. So you're not going to see stock prices multiplying like that. So you need to take that into account when you're figuring out your own strategy. I made another video here that I'll link to that helps you determine your investing strategy. Some people, especially if you're older, if you're getting ready for retirement coming up in the next 5, 10, 20 years, you can't take as much risk. So these kinds of dividend stocks are really kind of appealing looking. Similarly, yesterday we saw Tesla drop like 20, 30%, something crazy like that. Whereas Realty Income only dropped 0.5%. So you're gonna see a lot less of those huge waves, like you will see with big, crazy kind of tech stocks and things like that. I'm a little bit younger and I do have stocks, I do have Realty Income and stuff like that, but it's not gonna be the huge main portion of my portfolio. I like to take a little bit more risk, and I've budgeted things so that, you know, even if things do get stirred up like they did yesterday, I'll be okay. So that's how dividends and dividend income can play into your portfolio. I hope that was helpful. Let me know if you have any questions. Let me know if you're trying to figure out your own investing style, or if you want more suggestions on other nice dividend stocks. Hit me up in the comments below. Looking forward to hearing your thoughts. Thank you guys very much for your time and for choosing to watch me among millions of other YouTubers. Thank you guys very much. I love you and have a great day.